Negativity coming through. NSE 20 down 0.4% on Friday. Of course, we did see relatively big moves. And just on that note, that's the MPC keeping rates unchanged, and this prompting a lot of people to perhaps head into various parts of the economy, money market being one of them. What is your view on this, and how do you see asset allocation playing out, Ali Khan?
Interesting question. NSE 20 is about 2% off its 2010 high. It's up about 40% year to date. And we've seemed to finding a little bit of exhaustion at these levels, and hence we haven't broken through the 2010 high. I expect us to break through that and run about another 15% higher into the end of the year. Regarding asset allocation, there's been a huge demand for bonds in Kenya, not unlike the bond demand you've seen in South Africa. You've sold 400% more bonds to foreigners than in any year before. And it's a similar story in Kenya as well. There's been this massive growth in bond market appetite. But I think on balance, the bond market was a sure thing, a one-way bet for a very long time, but it doesn't look such a one-way bet anymore. So I think you're seeing some asset reallocation into the equity market. It hasn't become a stampede yet, but I expect it will continue to build.
And of course, Ali Khan, relatively bullish about the NSE 20, and this is what most investors have been seeing, of course, this year.
Yes.
Where do you see the NSE 20 going from here onwards? Because people are relatively divided. At one point, we saw great momentum to the upside, and then things started slowing down.
Absolutely. I think most sub-Saharan African markets are in a sweet spot. I think we're seeing an asset allocation, a macro asset allocation to African equities, which is a rising tide. I think the international community was underinvested, close to zero, and we're moving up towards neutral. It'll be a long, drawn-out process, and it's a rising tide. With regard to the Nairobi Stock Exchange in particular, I don't think we've run out of momentum yet. The economy is continuing to grow. We're seeing a 5.2% GDP rate this year probably, and further acceleration into next year. So I think we'll have these bouts when people lose a little bit of faith, but essentially we remain in a bull channel.
KPLC down 3.3% on Friday. Of course, a lot of talk about strike action. That was done away with. But we saw pre-tax profit an 18% rise, and this disappointing most investors.
It's a fiendishly complicated stock at the moment because, as you said, the results, I think, did not meet baseline expectations. But really what's going on with KPLC is a fundamental restructuring of the balance sheet. The government hold a lot of preference shares which are going to be exchanged into ordinary shares. The way the price is trading, it's as if everyone expects the government to take quite a vicious haircut on that exchange. That's not clear. I don't know what that outcome is yet. So you are sort of throwing darts in the dark, but the price action is signaling that conclusion will be very positive for shareholders on the books. Light bit of profit taking on at the end of last week, but I expect 260 and 280 towards the upside over the next few sessions.
Looking at Kenyan Cobalt, a big mover as well, and of course license reinstated. It was a big issue for investors as well. Many people staying away from this stock. Given the fact that we have seen resolution there, how do you see things playing out here, given the fact that, of course, prospects for the oil market always positive, Ali Khan?
Absolutely. It trades on a price earnings ratio of 10.5. They've expanded their footprint all over Africa. They're in Ethiopia, they're in Zambia, they've bulked up in a big way. The price had been one of the best performing share prices at the stock exchange until we got this incredible noise that came out of this spat between the Kenyan Cobalt, the refinery and the ministry. And that brought us down about 20%. So I think this rally that we saw probably has a little bit more behind it, as long as we have now reached a conclusion in this spat, which has been very long running. It's not clear that they've resolved everything because it was the permanent secretary who made a bunch of announcements. The company were a lot more coy in what they said on Friday.
Centum was down around 1% on Friday, closing at 24 shillings 50. News out for this company this morning. Apart from other things, they are planning to expand their real estate portfolio.
Absolutely. They're up about 122% over 12 months. They've very much retooled the company for faster alpha growth. What they're doing is resizing their exposure downwards towards the Nairobi Stock Exchange, upsizing their real estate exposure. And I think that's a very clever bet. Real estate across Africa, north of South Africa, which rallied much earlier, has been in the sweetest of sweet spots. In Nairobi, for example, prices are up over 3 years, 120%, and it looks as if it's got legs. So I like what they're doing, and I think there's more price appreciation in that stock towards 30, but it's no longer a dividend stock.
All right, looking at Safaricom and Zain, we've heard news that the row has even gotten to the president's office, and Zain asking for a change in the regulatory environment. Safaricom accounting for a massive part of the market capitalization on the NSE, and it traded at around 445 on Friday. Ali Khan, where do you see all this going? Because at the end of the day, we're just seeing so many price wars ensuing. We've got new regulations that are coming to the fore in November. Safaricom ahead of the curve, changing tariffs already.
Yes, I mean, it's been a brutal and vicious price war. It's been a blitzkrieg across all our newspapers and our media. It's frightened the living daylights out of some of the Safaricom shareholders. We've come down from 615 August 8 to where we are now, 450. Had we not seen this price movement, the index would be at new 2010 highs. I think we're in a period of serious turbulence. I doubt that Zain can pursue the strategy at these price points for very much longer. I think that they will attempt to sort of recalibrate the prices once they launch Airtel. But as you've said, it's been a very brutal price war. It's put a lot of pressure on everyone's revenues, and I think everyone will be looking for November for the half-year results, which actually will be quite good because the price war only hit the second half of that. I think, ultimately we're moving to a commoditized voice and SMS business, and it's all about the internet, and that's where I think Safaricom have a key advantage and are ahead of the curve. But the price has taken somewhat of a beating of late.